Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on yesterday, as you recall, we got an RXT sell on Friday, and we did see a flat to downward move over the next two sessions in the S&P 500. We actually traded down to S3 today, and the typical trade suggests that it will drift down for 2 days. We printed S3 with an R2 high today, so this was pretty significant and potentially is suggesting that the support levels are going to hold, but there's much more details I'll go through in a minute in the technical section. As we look at the markets in general, the S&P was up 14.3%, up 14.6% on the year. NASDAQ was up 0.5% and up 40.2% on the year, and we saw the Russell up 1.4%, and it is up 14.9%. So if I told you back in early April that the NASDAQ would be up 40% and all the markets would be up 14+%, the Dow Jones is a laggard. I think it's up around 5.6% on the year. But who would have thought that the markets could be where they are right now? We're seeing massive amount of news about COVID cases, and markets just don't care right now. This was a big driver of the markets going down in March and April, and none of this seems to affect the markets. All of a sudden, everything is rosy, and we're just going higher, and everything's going to be wonderful. Projections for 2021 are starting to come in from analysts, and many folks are looking at higher prices again next year. So there's nothing that seems to be able to stop this market at the moment. As you know, in last week's live stream, I did go through a lot of details on my longer term expectations, and I will be doing a live stream not on Wednesday as usual, but on Thursday, and it'll be at the same time at 1:30 New York time. But I'll go through some of the longer term viewpoints in the market, and especially starting to set up how we're looking as we come into the end of this year. But as we go forward today, as I mentioned, no news coming out. On Thursday, we'll have the claims numbers coming out, looking at 750-ish, and then we'll have the continuing claims also. As I've been talking about, I'm expecting to see those around 5.2 million, somewhere around that level. But we'll talk more about that in tomorrow's video. But I really believe what's setting up here is the markets are still grinding higher, but they're stalling here. And you'll see when I go through the database tonight, we're starting to see some minor selling starting to come in. And I've been talking about this probably in the last 2 or 3 videos, that we're starting to see this type of action come into the market. So this is somewhat concerning. I'll go through all the details here in a few minutes. There's literally no news that's coming out this week that is likely to drive the markets either way from a news-oriented standpoint. And as I mentioned before, it's all about sentiment. Now, we did see plenty of vaccine news coming out, a lot of talk about the UK, other aspects of the vaccines. While that was helpful in the markets, we just didn't see this big burst like we saw when the Pfizer announced several weeks ago. We saw that big spike up. But the other thing that we're hearing, and we keep talking about this, is the stimulus. And stimulus continues to be jawboning. We're coming into the D-Day, which we're at the end of the year. We're going to see the rent forbearance start to disappear, and also we're going to see unemployment benefits get cut. And so there's a hard deadline there. So maybe they'll get something done as we come into year end, but I still believe as we go through every day, we're not going to see any impact on the markets, at least on a short-term basis. And the other thing that we'll start to see as we come into year end is lots of seasonal tendencies, squaring up of books. We've got the Tesla event coming up with the S&P 500. So there's plenty of things that we're going to have to deal with from the markets, from a financial viewpoint and a structuring viewpoint. So let's go ahead and take a look at the charts. see how they're set up for Wednesday. As we begin with the review of the WaveTech database, as I mentioned in the opening comments, we did have 445 new buy signals and about 90 sell signals, giving us a negative rotation and pushing the overall bullish on a short-term basis down to 77.64. Yesterday it was 78.49. So this isn't material, but we're seeing this stalling that I've been talking about. We printed up to almost 80% bullish, and now we're starting to back off. And this is exactly how the database looks when it's starting to get to a very extended point. Now, the current duration has moved out to 16.28, which still says there's a good 10, maybe 12 more sessions of positive trend overall. But this is still very concerning. You'll see when I go through the technicals on the S&P that we're starting to see momentum losses start to become more prevalent as well. As this database unfolds throughout the rest of this week, it won't take much to roll this over fairly quick. These triggers on the trends, I went through a scan of quite a few different symbols tonight, and I did see a lot of things that are very close that could roll over very quickly and start to signal quite a few sell signals. As we begin by looking at the S&P 500, we're seeing some positive overnight action. We're trading at 37.10 on the futures. As we look at the market grid for today, the R1 is 3710.75. We've traded as high as 3714.75, so we've traded just about in between R1, R2. My expectation is that R2 will probably be the high of the session if we continue to see positive sentiment as we come into the U.S. Open. S1 is 3693.25. Overnight, we've seen a 3704, so we still have the likelihood of going down to 32, at least S1. I think that will be the low. We're looking at most likely an S1, R2 high for the day. We look back at yesterday, as I mentioned in yesterday's video, I thought we could trade down toward the S3 number. The S3 was 3666. We did print down to 3664, and this satisfied that two-day slide I'll show you on the cash market here in a minute for the STXL. So that was the perfect point for it to reverse off of, and I thought we'd get an S, maybe an S3 R1, and we actually printed an S3 R2 yesterday, so it was a little bit stronger. As we look at the SPX, we'll see the range yesterday, the low was 3678, S2 was 3679, so we did print an S2 in the cash, and on the upside we did see 3708, which was in between R2, R3, which was 3704 to 3710. As we look at the market grid for Wednesday, the expectations are that we are likely to see a retest of that 3714 level. We could print an S3 3721. This will map out pretty well with the weekly grid, and if you're a WaveTech user, you'll be able to see this stuff that I'm talking about here on the market grid that's on the Portfolio Expert website. But if we look at this, but as we go to the weekly here, you'll see that R1 is 3721. This is likely to be the top of this market this week. We could stretch it to 37.45. There is a fair amount of risk that's coming on. I'm going to go back to the daily charts in a minute, but if you notice looking at the PPMs, even on a weekly basis, they're starting to stall here. They're very positive from the standpoint of the trend levels that they're at, but the support is quite a bit below the markets right now at 35.38 is the first support. So let's go back to the daily. And what I want to show you on the daily chart is that we're starting to see the PPMs roll over and they're starting to turn down. And on the futures, they've already turned down and have cut through some of the key levels. So we're seeing the S&P start to roll a bit. If we did print up on the market grid to the 3721 level and then close lower on the session, that would be very negative. I still think we've got probably one more day up, and then we should start to see, as we come into Thursday, we should start to backtrace just a little bit, as this is the 5th day in the pattern, and a lot of times we'll get between 5 and 8 days in a pattern like this. Sometimes it'll extend to 9, but this looks like we're very close to the end of this pattern. Next market I'll cover is the NASDAQ futures. On the daily futures, we're up 875, up 0.07, so basically flat overnight. We're looking at the market grid for tonight. We're looking at S1, 12,607. The low so far has been 12,634, so there's potentially a move down to at least S1. On the upside, S2 is 12,700. We printed to 12,657. R1, 12,667. So we have just printed slightly above the R1 number. So I don't see a big move coming here, but we are seeing PPM1 starting to roll over as we look at the PPMs here on the daily. We're still above the first and second derivative. PPM2 is in between its first and second derivative, and so is PPM3. It's in between its first and second derivative. These are not real robust patterns that are set up here. So the expectation with this market grid continuing to contract here, we're likely to see some downside, and it's key in all of these indices right now is the 10-period moving average. 12,446 is that number. If we compare that to the market grid, that is below the STX number for today, so that's not likely to come into play, but that will be the number that will be underneath this market to keep markets fairly firm. The same situation on the S&P, on the futures, and on the cash. The 10-period moving average will be your major support at this time. Reviewing the U.S. dollar, I am seeing the potential for a bottom setting up here. PPM 1 is at a minus 0.126. That represents the 10-period moving average, which is 91.02. The high so far today, 90.93. If we can penetrate through that 91.20 level, then we would see a move toward the 21-period moving average, and that would move us toward 91.87. The key level on the downside will be the STX number today at 90.53. The final market that I'll cover today is gold. As I mentioned in yesterday's video, I thought we would trade up to the 40-day moving average. That was at 1878. We hit 1879.80. We backed off of that, closed just below it. And overnight, we're seeing some selling. We're back at 1863 as we look at the market grid for today. 1860.7 is S2. We could print as low as 1853. And if the dollar starts to set up a minor low, we're likely to see some backfilling in this market. And as I mentioned over the last couple of videos in covering gold, I do expect to see some consolidation here. There is a potential for gold to set up a low on the weekly charts. But looking at the weekly charts briefly, the 10-week moving average is 1919 on a weekly basis. We're also looking at the grid for this week, and 1879 is R2, and we printed right to R2, 1879.70. The high has been 1879.8, and so we're backing off of that a bit. I suspect we've seen the bulk of the range for this week on the upside, and we'll start to backfill a little bit, possibly moving back towards some of these numbers here in the grid. 1858 is the R1, which will actually be support since we're above it. Then all the way down to 1821 is the S1, I don't see us getting back that low. Probably around 1852 to 1848 should be the lows, and I'll be able to cover this more in tomorrow night's video. This will complete the video. Thanks for watching. We'll talk to you tomorrow night.